Hello and welcome. Today we are going to explore the best volume indicators available in RTrader Pro and how they can make your trading decisions more effective. Get ready to dive into the world of volume analysis, where you will discover some amazing tools that could give you an edge in the market. By the end of this session, you will know the top volume indicators and how to use them. Ready to get started? Have you ever wondered what drives the momentum behind a price move? Understanding the activity behind the scenes is key to making informed trading decisions. That is where volume indicators come in. They are like a window into the intensity of market action, helping you see whether there is strong interest backing a price move or if it is just a fleeting shift. Let us dive into one of the most straightforward yet powerful tools to get a clearer picture. To begin, let us talk about the basic volume indicator. This is the most straightforward tool out there. It shows the number of shares or contracts traded during a specific time period. Imagine you are wondering how active a stock is at any given moment. This indicator is perfect for that. When you see a large spike in volume, it means that something interesting is happening. Maybe a strong trend is starting. Do you think it would be helpful to know when there is a lot of interest in an asset? In addition to volume indicators, there are chart patterns that work hand in hand with volume analysis to provide even more insight into price action. Let us explore some of these patterns. One of the most recognizable chart patterns is the head and shoulders pattern. This pattern consists of three peaks, with the middle peak being the highest. It signals a potential reversal of a trend, especially when confirmed by volume changes. For example, during the formation of the right shoulder, if the volume is declining, it often suggests that the trend is weakening, making a reversal more likely. Have you ever seen a head and shoulders pattern in a chart before? Another important chart pattern is the double top or double bottom. These patterns occur when the price attempts to break a level twice but fails. In a double top, the price hits a resistance level twice before reversing downward, while in a double bottom, it hits support twice before moving up. Volume plays a crucial role in confirming these patterns. If you see high volume when the price is moving away from the double top or double bottom, it suggests a stronger reversal. Would you feel more confident making a trade if you could confirm the pattern with volume? We also have the ascending and descending triangles. An ascending triangle is formed when there is a horizontal resistance level and rising support, indicating buyers are gaining strength. A descending triangle shows the opposite, with sellers gaining momentum. Volume can provide confirmation here as well. In an ascending triangle, a breakout above the resistance line with strong volume suggests a continuation of the uptrend. Have you thought about how identifying these patterns can help you decide on entry or exit points? Flags and pennants are other short-term continuation patterns that traders often use. Flags look like small rectangles that slope against the prevailing trend, while pennants are small symmetrical triangles. Both patterns indicate a pause in the trend before it continues. Volume is critical during the breakout phase. When the price breaks out of a flag or pennant, high volume indicates that the trend is likely to continue. How might recognizing these continuation patterns affect your trading strategy? Lastly, let us discuss the wedge pattern, which can be either a rising wedge or a falling wedge. A rising wedge indicates a potential bearish reversal, while a falling wedge suggests a bullish reversal. Volume is typically declining during the formation of the wedge, which means that a breakout accompanied by an increase in volume is a strong signal. Understanding these wedge patterns can help you anticipate reversals. Do you see how combining volume with chart patterns can give you a clearer picture of market trends? By learning to recognize these chart patterns and combining them with volume analysis, you can gain deeper insights into market behavior. These patterns can help you make better decisions on when to enter or exit trades, especially when the volume confirms what the price action is suggesting. You can use this volume indicator to confirm price movements, especially when a stock breaks out of a range or makes a sudden reversal. For example, if you see high volume when a stock breaks out, it is a strong sign that the price will keep moving in that direction. Is it not exciting to have a tool that gives you such clear signals? Now let us move on to the on-balance volume indicator. We will call it on-balance volume for now. This indicator adds up the volume on days when the stock price goes up and subtracts it when the stock price goes down. This helps you understand the buying and selling pressure over time. Have you ever thought about how volume can influence price movement over the long term? In addition to volume indicators, understanding chart patterns can greatly enhance your ability to interpret on-balance volume more effectively. For example, one important chart pattern to look out for is the cup and handle pattern. The cup forms when the price declines and then gradually rises back to the same level, creating a rounded U shape. The handle forms as the price pulls back slightly before making a breakout. When you see increasing on-balance volume during the formation of the cup, it suggests strong buying interest. If volume also increases during the breakout above the handle, it is a strong confirmation of an upward move. Have you ever noticed this kind of pattern forming in the charts you have analyzed? Another key chart pattern is the inverse head and shoulders. This is similar to the standard head and shoulders pattern, but it signals a reversal from a downtrend to an uptrend. The on-balance volume can play a crucial role here by showing whether buying pressure is increasing as the pattern forms. If you see on-balance volume rising while the price is still forming the right shoulder, it may signal that buyers are stepping in, and the asset is likely to reverse its trend. How could using on-balance volume with this pattern change the way you anticipate trend reversals? We can also consider the triangle patterns ascending, descending, and symmetrical. When the price is consolidating in a triangle, the on-balance volume can give you hints about the direction of the breakout. For an ascending triangle, if on-balance volume is rising, it shows that buyers are gaining strength and that the price may break above resistance. For a descending triangle, falling on-balance volume suggests increasing selling pressure. Have you ever used volume to help predict the outcome of a consolidation pattern like a triangle? Wedges are another pattern where on-balance volume can be useful. In a rising wedge, which generally signals a bearish reversal, declining on-balance volume can confirm that buying pressure is weakening. In a falling wedge, rising on-balance volume can indicate that sellers are losing strength and a bullish reversal might be on the horizon. Understanding how on-balance volume interacts with these wedge patterns can give you a clearer idea of when a breakout is more likely to succeed. Do you see how combining on-balance volume with these chart patterns can make your analysis stronger? On-balance volume can help you see if what is often called smart money is buying or selling an asset before a big move in the price. If the price is rising, but on-balance volume is falling, it may signal a weakening trend. On the other hand, when both the price and on-balance volume are moving higher, it is a good confirmation of strong momentum. How could knowing this change the way you trade? Now let us talk about the volume profile indicator. This one is a little different because it does not just show the volume over time. Instead, it shows you how much trading volume occurred at different price levels. That is why volume profile is one of the most insightful volume indicators out there. It helps you see where the most trading took place, which means you can spot important support and resistance levels. When you look at the volume profile, you will see areas of high and low trading activity. High volume nodes represent price levels where a significant amount of trading occurred. These high volume nodes can act as strong support or resistance zones because they indicate levels where traders were very active, suggesting that buyers and sellers may view these levels as fair value. Price often tends to pause or reverse around these high volume areas. On the other hand, low volume areas indicate price levels with less trading activity. When price moves into a low volume area, it often travels through it quickly since there is less perceived interest or resistance in these zones. This can help you identify potential breakout opportunities. Another concept within volume profile is the point of control, which is the price level where the most trading activity occurred during a specific period. The point of control is important because it represents the price that had the most acceptance by market participants. If the current price is above the point of control, it may indicate bullish sentiment, while a price below it may suggest bearish sentiment. Understanding these concepts can help you gauge the likely direction of price movement and decide where to place your entries and exits. Have you also considered how volume profile can help in trend analysis? When a trend is strong, you will often see volume shifting upwards or downwards through multiple price levels, with new high volume nodes forming along the trend direction. Conversely, when the market is ranging, you will notice the volume clustering around a specific range, creating a balance area. Recognizing these shifts can help you decide if a trend is gaining or losing momentum. Do you see how identifying these volume zones could make your trades more effective? When you look at the volume profile, you will see areas with a lot of trading volume called high volume nodes. These are often turning points for the price. Low volume areas, on the other hand, show spots where the price might move quickly. Have you ever thought about how knowing where the most trading happened could help you decide where to enter or exit a trade? Let us continue with another volume indicator called the accumulation distribution line. This one uses both price and volume to show whether an asset is being bought or sold. You could call it the big players indicator. This is because it helps you see what the larger players in the market are doing, even if the price changes are small. If the accumulation distribution line is rising while the price is falling, it might mean that the big players are buying before a move up. How could seeing the actions of big players affect your trading decisions? Next is the Chaikin money flow indicator. We call it Chaikin money flow for short. This indicator also measures buying or selling activity over a period of time. It is all about whether buyers or sellers are in control. If the Chaikin money flow value is above 0, it means that buyers are in charge. If it is below 0, sellers have the upper hand. This can help you confirm trends or spot possible reversals. Let us expand on this with some chart patterns. Chaikin money flow can be very effective when combined with classic chart patterns. For instance, during a head and shoulders pattern, if the Chaikin money flow starts to decline as the right shoulder is being formed, it can confirm that sellers are taking control, adding more weight to the idea that a bearish reversal may be imminent. Similarly, during an inverse head and shoulders pattern, if the Chaikin money flow starts rising during the right shoulder, it confirms increased buying pressure, suggesting that a bullish reversal is likely. Have you ever noticed Chaikin money flow giving such hints during these patterns? Chaikin money flow is also helpful in analyzing triangle patterns. For ascending triangles, where price is forming higher lows while resistance stays horizontal, if the Chaikin money flow is rising, it shows that buyers are gradually gaining control, making a bullish breakout more likely. In descending triangles, if the Chaikin money flow is falling, it indicates that sellers are dominant, suggesting that the price may break below support. Have you considered how this indicator might be used to help predict breakouts from these triangle formations? Another great example is using Chaikin money flow with wedge patterns. In a rising wedge, which is generally a bearish signal, declining Chaikin money flow can provide confirmation that buyers are losing strength. In a falling wedge, which is typically a bullish signal, rising Chaikin money flow suggests that sellers are losing their grip and a breakout to the upside is likely. Understanding how Chaikin money flow interacts with these patterns can help you anticipate market reversals with greater confidence. Do you see how combining Chaikin money flow with these chart patterns can give you stronger insights into potential breakouts or breakdowns? Another useful volume indicator is the money flow index. Think of the money flow index as similar to a relative strength indicator, but with volume added in. This makes it great for finding overbought or oversold conditions. When the money flow index goes above 80, the asset might be overbought. When it drops below 20, it might be oversold. Combining this with other volume indicators can give you reliable trading signals. Would you feel more confident in spotting reversals using a tool that shows both price strength and volume? Next up, we have the volume-weighted average price indicator. It gives the average price of an asset throughout the trading day, adjusted for volume. When the price is above the volume-weighted average price, it means that buyers are stronger. Below the volume-weighted average price means that sellers are stronger. Many traders use this indicator as a key point to decide when to enter or exit trades. Are you ready to see how this could give you a better understanding of the market? Let us also discuss the price and volume trend indicator. The price and volume trend indicator combines price and volume by adding or subtracting a percentage of volume based on price movement. It is useful for spotting early signs of changes in trends. For instance, if the price is making new highs, but the price and volume trend is not moving up, it might be a sign that the trend is losing strength. How could this help you avoid getting caught in false signals? To expand on how the price and volume trend PVT indicator works with chart patterns, let us look at some specific examples. One notable chart pattern is the double top or double bottom. If you notice that the price is forming a double top, but the PVT is not increasing during the second peak, it is a warning sign that buying pressure is diminishing and the reversal may be more likely. Similarly, during a double bottom, if the PVT starts to rise as the second low is forming, it suggests stronger buying pressure and a higher likelihood of a bullish reversal. This makes the PVT a great confirmation tool for these classic reversal patterns. PVT is also very effective in understanding breakouts from triangles. For an ascending triangle, if the PVT is rising as the price approaches the resistance level, it indicates that buyers are accumulating and a breakout is more likely. On the other hand, if the price is forming a descending triangle and the PVT is falling, It suggests that selling pressure is building, increasing the chances of a bearish breakout. This information can be crucial in deciding whether to take a position before the breakout actually occurs. Another application of PVT is in continuation patterns such as flags and pennants. When price forms a flag or pennant, if the PVT is moving in the same direction as the prevailing trend, it provides a stronger signal that the trend will continue after the breakout. For example, in a bullish flag, if PVT continues to rise, it indicates that buyers are still supporting the trend, increasing confidence that the upward movement will resume. Wedge patterns can also be analyzed with the PVT indicator. In the case of a rising wedge, if the PVT is declining, it serves as an early warning that the uptrend may be losing steam, suggesting a possible bearish reversal. Conversely, in a falling wedge, if the PVT starts to increase, it indicates that buyers are stepping in and that a bullish breakout could be on the horizon. This can help traders position themselves ahead of major market moves. By combining PVT with these various chart patterns, you can gain a more nuanced understanding of price movements and better assess the strength behind potential breakouts or reversals. PVT not only helps confirm chart patterns, but also helps identify when a pattern may fail, which is crucial in avoiding false signals and improving your overall trading strategy. As we go through all these indicators, you might be wondering which ones are the best to use. The answer depends on your trading style. If you like day trading, you might find the volume-weighted average price and the money flow index to be more helpful. If you are looking at a longer time frame, volume profile or on balance volume might be better for you. Which one of these do you think would fit your trading style? One tip to remember is that you do not have to use these indicators alone. Often using more than one volume indicator together can give you a clearer picture. For example, if you combine unbalanced volume with volume-weighted average price, you get a broader view of market sentiment. How can using a combination of indicators make you more confident in your trading decisions? Volume indicators are great tools because they let you see how strong a price move is. They tell you whether other traders are supporting the move with volume. By practicing with these volume indicators in RTrader Pro, you can find the ones that work best for you. And do not forget to combine them with other tools in your trading strategy for even better results. Getting comfortable with volume indicators takes practice, but once you understand how volume interacts with price action, you will be much more prepared to make solid trading decisions. Keep practicing and refining your approach. Thank you for spending time with me today. Now go out there and take control of your trading. Keep learning, keep experimenting, and happy trading.